Yo, 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 welcome back to another weekly market outlook. For today's um, video, I do have a little outline for us, but I do want to start off this video taking a look at the economic calendar here. On Monday, we do not have, consumer confidence is usually, I would assume, is usually a red folder news, but this week, I guess it's an orange folder news. Monday, Tuesday, we do not have any red folder news. Wednesday, we do have a bank holiday during the middle of the week, which is kind of awkward. I'm not too familiar with what the approach is here for a bank holiday being on a Wednesday. I'm usually familiar with a bank holiday being on a Monday, but Christmas is on Wednesday of this week, and we do have unemployment claims here coming out at 8:30 a.m. on Thursday, so that's some volatility here. And Friday, we do not have much. So this week, not too exciting. We have a bank holiday on Wednesday. Just be wary of that. Going into the actual charts here, I always like to start off my analysis here on the dollar, and especially on the higher time frames, because that is where you're going to get most of your majority or the structure of what your bias is going to be coming into for this week. So the weekly candle here, the way we closed here on previous week, I would say that the weekly bias here for the dollar here is for us to attack previous week's high. So dollar here, based on the weekly time frame, dollar is suggesting higher prices, but that all depends on if we can respect the daily BISI or not. So the daily BISI is going to be this gray box right there. If you guys can see it, but it is going to be essentially that inefficiency right there. So if prices could respect this inefficiency, then higher prices is going to be, what I want to see. And I want to see us take out previous week's high if we're going to respect this daily BISI on the dollar. But like I said, because we have, Christmas this week on Wednesday and there's a bank holiday, we could possibly just consolidate. One thing that I do want you guys to pay attention to too is the immediate rebalance on the weekly time frame, right? Will we create a weekly fair value gap here, or will we just have immediate rebalance, or we could just expand higher and create that weekly fair value gap, right? So here, weekly IRB. So if prices does end up trading back all the way down to that blue line, that would complete basically the weekly immediate rebalance, and that would actually cause us to not create a weekly fair value gap. And a weekly fair value gap is something that I do want to see created. But coming into Monday's price action, I want to see us take out previous day low. And why are you, you're probably thinking like, okay, why are you just going to assume that previous day low is the draw of liquidity? Well, based on this daily candle here, right? So make this a little bit bigger. So based on this blue line right here, notice where I'm drawing your attention to is that down closed candle. That is a daily candle, right? And based on this down closed candle, what can you anticipate for prices to do? Are we near the candlestick's low or high with the opening of this week on the dollar? So are we closer to, make this red, So, and this is where we opened up here on this weekly candle. This is the high. Let me make that green. So is the blue line closer to the red line or the green line? That's based on where we are, right? Based on the images that I have drawn on for you guys. The blue line is closer to the red line. The green line here is all the way up here, right? So that's just visual representation of what I'm trying to explain to you guys here. So with this next daily candle, I can anticipate for prices, create the open here on this week, on Monday's trading, trade up into some sort of lower time frame PD array relative to the daily, right? So you're gonna go from daily time frame to possibly the 4-hour time frame, 6-hour time frame, 8-hour time frame, but you would go on to the specific time frame, and hopefully prices respects that PD array. So prices here in this case, we have that bearish daily candle, and on the lower time frames relative to the daily time frame, there is a 4-hour fair value gap. So prices could trade up into this 4-hour fair value gap and take out previous day low. And like I said before, based on my weekly buys here, at least, I don't want to see us take out previous week's low. I do want to see us, respect this daily fair value gap and possibly continue higher and attack previous week's high. That's just a bias. That's just kind of what I have in mind. But anything could happen. Like I said, we do have a bank holiday coming into this week, and we don't have much volatility. We only have one red folder news event, so we could end up just consolidating here. But if we are going to move, I can, I'm kind of structuring out. Okay, if we're going to continue lower, we could continue lower to attack the weekly immediate rebalance. But if we are going to continue higher, previous week's high wouldn't surprise me. One thing that I do want to point out is that the monthly candle here is essentially closing here it's going to close the beginning of next week on Monday or something like that. So if we have expanded already, a decent amount here on the monthly candle, right? What tends to happen is that, so the start of a candle is going to be where it's open, right? And let's just imagine this is going to be an up-close candle. You have the open, you have the lows, and we have, you create that low, you manipulate lower, so AMD, and then you have the expansion. Usually after expansion is going to be consolidation, which is why whenever I said that consolidation, if we consolidate this week, it's something that, it's like, oh, it's understandable that we consolidate here because we're near the monthly candles close. We expanded a ton this month. On NQ, we just dropped like 1,000 points on FOMC last week. So that's for different discussion. But what I'm trying to get at is, after we create a high for a up close candle, we tend to have some sort of retracement, right? So a candle's not always going to continue to expand higher or lower, right? There's always going to be, at that very end of the candlestick, there's always going to be some sort of retracement. So what I'm trying to say is that if we have created the high already on the monthly candle, it is reasonable for us to consolidate and close within this blue shaded box, right? Between that 0.2 to 0.3 of the monthly candles range. So consolidation is something that could possibly happen this week. But yeah, I kind of gave you guys, both, if we're going to continue higher, or if we are going to continue higher, previous week's high is reasonable. We just have to show respect to the daily busy. But if we end up, continuing to sell off, the weekly immediate rebalance is a level that I would watch out for. and I don't see us taking out previous week's low, but just one thing that to watch out for is that, like I said, that 0.2 to 0.3 of the monthly candles range here on the dollar. So I wouldn't say I have a definitive bias here coming into the dollar, but I do want to see higher prices. We haven't disrespected the daily BISI yet, so there's not a reason for me to clearly and confidently say that we're going to sell off. But yeah, if I had a, if I really had to choose a side, I would say I would favor the bulls for the weekly time frame. But on Monday's price action, right? On Monday's trading, I do want to see us take out previous day low. But yeah, that's gonna be it for the dollar. Coming into NQ and ES, I have the same bias here for NQ and ES. I actually don't have a bias. Based on this weekly candle, it's too, like, if we were going to be bearish, I didn't want to see this, deep of a retracement back up on Friday's trading. We expanded a decent amount here on Friday, right? Let's see how much points did we expand. We basically expanded 800 points back inside this weekly's 800 points back into the weekly range, or the candles range, the weekly candles range. If we were going to remain bearish, I do want to see us respect this daily SIBI here, but with the way the weekly candles closed, it's just, I would rather not force a bias here coming into this week on NQ and ES, because we're kind of trading between two pretty important PD arrays, right? So there's that daily SIBI and there's that weekly BISI. We have neither disrespected both of the fair value gaps, right? We haven't really clearly made selected a side yet. We didn't disrespect this daily SIBI, but we didn't disrespect this weekly BISI. So coming into this week on NQ, I would decide to sit on my hands and let the intraday models play out and relying on the lower time frames relative to the weekly. So basically that just means any time frames that are lower on the weekly time frame, or I'm going to use as bias. So the daily candle, after every single daily candle, I would have a new bias. After, during a session, I could I could use a 4-hour candle, a 6-hour candle for bias. But based on the weekly time frame, I'm just going to sit out this week, sit on my hands, and just let price action play one day at a time. And going back to the TGIF setup, one thing that I do want to note is the yearly candle here on NQ. So look at this yearly candle, right? So what did this yearly candle do here? We can kind of break it down. We opened up around here. We opened, manipulation lower here, and we had a pretty large expansion. We expanded, decent amount, and after expanding, right, what's the next step after expanding? It's always going to be some sort of, retracement, and then, into some sort of consolidation. This is something that I am going to be looking out for this week, because the yearly candle is about to close here soon. In about, literally at the start of next week, we close on the yearly candle. So, like I said, a candlestick doesn't expand in one direction the entire time. There's always going to be, there's always going to be some drawbacks, or not drawbacks, but retracements. And based on that idea, prices should have created the high for the yearly candle. I would be kind of shocked if we do take out all-time highs here again this week. But what I can anticipate is for us to trade back inside of this blue shaded zone here. So somewhere between that somewhere in this blue box, I want to see prices close in, because that would, you know, TGIF, right? TGIF is a concept that ICT, introduced to us. It's an acronym. Thank God it's Friday. And if you apply that concept to every single candle, right, is a power of three candle. There's always going to be open, low, high, close. But ICT introduces TGIF only on the weekly time frame. Here, I'm trying to introduce TGIF, but instead of it being thank God it's Friday, consider it like a thank God it's the end of a candlestick. But that's kind of weird to, TGIF. I'm not even too sure why. Well, I mean, I do have a clear idea because he says thank God it's Friday. But if you can apply that concept to every single candle, it shouldn't. This will broaden your perspective, right? Because you wouldn't be just solely focused on the weekly candle to only apply TGIF. Once you have kind of unlocked the idea that every single candle is a story of its own, you can start seeing these patterns play out over and over and over again, right? Even a 4 hour candle gets created the same way as a weekly candle. There's always going to be an open, there's always going to be a low, and there's always going to be a high and close. So apply TGIF to every single candlestick. The reason why he used the weekly candle is because the weekly candle, there's a lot of time for us to create. There's a lot of time, and because there's a lot of time, that means there's going to be a decent amount of range, right? The amount of range in this yearly candle here is 5,300 points. That's a lot of points, and it's kind of easy to apply TGIF to that time frame because you can that pullback back inside this range is let's see how much the pullback's range would have been. So if you're shorting based on the idea of TGIF back inside the range here, you could end up catching about 2,000 points just based on the retracement, right? But let's say you're trying to trade TGIF with the 15-minute time frame. Compare 5,300 points to 68 points, right? And that's not even TGIF yet. TGIF is that retracement. So let's see. Prices could move. Prices could move like 15 points back inside a average 15-minute candles range. You can't, if you're able to understand what I'm trying to explain here, then it should be a little bit easier to grasp. But yeah, that's the best I can explain it right now. But yeah, because there's so much time in a weekly candle, that's why he uses a TGIF. That's why he introduced the idea of retracement or retracing back inside a candle's range on the weekly time frame. But you can apply that on the monthly time frame. That's completely normal because the monthly candlestick has a month of time to create, right? There's going to be a lot of range there. But as I digress, going back to the charts, NQ, I don't have a bias. I would elect to use the daily candle as my higher time frame bias, right? So every single daily candle will have an objective of its own here. Like based on this daily candle, what can you anticipate for prices to do? Take out the daily low, right? The daily low should be the draw of liquidity. And that simply just based on that idea, you have a bias already. You have a target in mind, which is daily low. And just apply that with every single time frame or every single daily candle. That will give you your higher time frame or higher time frame bias for this week. But like I said before, this week on NQ, I have no bias. Just trading intraday models, trading intraday session models. So like 4 hour time frame will give me a higher time frame objective. On ES, same idea. No bias coming into, or I have no bias here, at least for the weekly time frame. I'm gonna use the daily time frame as a confluence or a objective. But this daily candle, I'm not completely too sure yet, but if I had to choose a side, I would like to see us take out previous day high. Previous day high could be a target because there's displacement here on the 4 hour time frame, and the daily candle is somewhat suggesting that we could end up retracing back inside of this daily SIBI here. But yeah, that would be my bias here coming into the weekly time frame on ES. So the indices don't have a bias. I would rely on intraday models or like daily candlesticks for bias, and 4 hour, 8 hour, 10 hour, 12 hour for my morning objective, PM objective. And with that basically wraps up my weekly market outlook. I know this week I didn't really give you guys clear information or a clear bias, but stuff happens. Sometimes you're not going to be given such a clear bias. So you guys can leave the video now, but I want to go over some of the trades that I did take last week, just so I can reinforce my thought process to myself and you guys. But yeah, so peace out to whoever is exiting the video, and I guess welcome to a different video, but it's all going to be combined in one video. The trades that I took last week I would say I'm pretty happy with the results of my trades from last week. Not because of they were winners or losers, but because I was actually able to follow my rules and execute on my strategy, right? So the first trade that I took last week was on December 16th, 2024, on Monday. And it was based on the ES daily model. So the trade I took was based off of this daily candlestick, right? So this daily candlestick is suggesting for us to take out previous day low, and notice how this weekly candlestick suggested that we should take out previous week's low. So the daily candle is in alignment with the weekly order flow. And notice how the daily candle has a separate low, or like the daily candle's low is different from the previous week's, or is different from the weekly candle's low. But they both suggest lower prices. So I actually did take this model. And this one I took based off of the daily model. And I went onto the 4 hour time frame to find, displacement, some sort of fair value gap to enter off of. And when prices trades back inside the 4 hour fair value gap right here, I take my entry. I have my stop loss at the 4 hour fair value gap's high, and I'm targeting previous day low and previous week's low, and possibly the weekly fair value gap, a rebalance of the weekly fair value gap. And notice how this weekly candle right here closed below that line. And that line is actually so every single fair value gap is created with every single fair value gap is created with 3 candles, right? And notice where this green line is. This green line is the second fair value gap's candle's high, and we closed below this green line. So that suggests that the weekly fair value gap could be rebalanced. So I had technically 3 objectives coming in for this trade. Is previous day low. After previous day low, why else should we be continuing lower? To attack previous week's low, right? After we take out previous week's low, why else should we be continuing lower? To rebalance the weekly fair value gap. So there's a lot of layers to this trade, and I didn't actually screenshot the outcome of this trade, but I ended up taking a loser. But with this is like a trade where I would take every single time, right? There's nothing about this trade that I disliked. It had a higher time frame objective, right? We had three reasons why we should be continuing lower. And the lower time frames, we had displacement. There's a fair value gap for us to enter off of, and I'm selling above the weekly open. If you're anticipating a bearish weekly candle, you always want to be a seller above the open, vice versa. If you anticipate for the weekly candle to be a up close candle, a bullish candle, you want to be a buyer below the open. And that's essentially what I did here. I was a seller above the weekly open when I'm anticipating a bearish weekly candle. Coming into Thursday, December 19th, 2024, I took another daily model, but instead of ES, I took it on NQ this time. And this idea is based off of, so we have a dealing range here we have a weekly dealing range here from this weekly swing low to this weekly swing high. There's a dealing range, right? And with every dealing range comes a premium and discount level. If we're below that a certain line, we're technically in discount, and if we're above that line, we're technically in premium. And one of the four reasons why prices moves is to retrace back into discount or retrace back into premium, right? Sellers, they don't want to be selling in discount. They want to be selling in premium. Vice versa. Buyers, they don't want to be buyers in premium. They want to be buyers in discount. So in this case, in this trade here, I'm anticipating for prices to seek out the discount level, right? So my higher time frame has been established, is that I want to see prices retrace back into the discount of a weekly dealing range. On the daily candle, it's suggesting the same thing. That daily candle is telling me that, hey, we're going to accomplish the higher time frame objective right now. And this is the 2-day time frame. Notice how we had a market structure shift. We trade back inside this, bullish fair value gap right here on NQ, and we respected it. We expanded higher. Once we break that swing low that gets created, once we get past that swing low, I would consider that as a market structure shift, meaning that prices are starting to favor a different direction than before. So now, because I have two confluences now, right? There's that higher time frame objective retracing back into discount, and another reason why we should continue lower is the market structure shift on the 2-day time frame. I'm going to now go onto the daily time frame, 4-hour time frame, to find some sort of entry pattern. And because my model here is on the daily time frame, I go onto the weekly time frame to find some sort of fair value gap to enter off of. And on the 4-hour time frame, we created a 4-hour fair value gap that could be rebalanced, and I take my entry at basically the previous week's low that's overlapped within the 4-hour fair value gap. And I'm targeting the previous day low, and I'm targeting a retracement back into the discount level, right? And so, I take my entry. I ended up getting, I didn't get stopped out, but my trade closed on me due to time. I told myself coming into that day that because we expanded 1,000 points last week here on NQ, right? So that very next day could be consolidation, or it could be, continuation of bearish price action. And my bet was that we were going to get bearish price action, but I had a time stop in play here. and the time stop actually manually took me out after the daily candle closed. So I get stopped out, and not stopped out, I get canceled out actually, and my trade closed on me at 4 p.m. Eastern time on Thursday. And yeah, I mean, right after that, we opened up for the Thursday's candle trading day, and we took out the objective. We took out the daily low, the 2-day low, and we ended up retracing back into discount. So this trade, you literally ideal trade, right? We had the weekly order flow in alignment with the daily model, or daily model is in alignment with the weekly order flow, and literally A+ trade, everything I'm looking for. The last trade that I took or I guess last week, was December 20th, 2024 on Friday. So we took out previous day low and 2-day low, right? On Friday, and we continued to expand lower on Thursday. On Friday, we actually had some sort of retracement back inside the range, and we expanded a decent amount. We expanded basically back inside the equilibrium or the premium of the dealing range from all-time highs to the weekly low, right? So from all-time highs to weekly low, there's a dealing range, and we retrace back inside the premium level. So in this specific trade, right, you're probably thinking like, dude, we're looking really bullish here. We have this large bullish 2-hour candle, and dude, we should be continuing higher here. I ended up taking a short here, not because I'm targeting previous week's low, but because I can target the 2-hour rebalance. The reason why I'm saying that we could rebalance this inefficiency here, and you can kind of see it here too, like just looking at this pattern here, it appears to me that we could end up rebalancing this 2-hour fair value gap, right? And objectively speaking, if you want to, if you don't want to be subjective and just be like, oh, dude, you're just looking at a candle and just coming up with a vague idea, notice where we closed relative to this green line. Or let's make this a blue line so it's not too confusing. That's too bright. So notice where we close here on this down close candle, right? Did we close above this blue line, or did we close below this blue line? We closed below the blue line, which means that the 2-hour fair value gap that we created could be rebalanced too. And that basically gives me an objective, right? That gives me a reason why prices should continue lower. So now that I have a higher time frame objective, or now that I understand the higher time frame order flow, I'm going to go onto the lower time frames relative to the 2-hour time frame for some sort of entry model. So my model here is actually based off of the 15-minute time frame. And this is the 15-minute candle right here. And notice how the 15-minute candle's low is the same low as the 30-minute candle, the 1-hour candle, and the 2-hour candle. So technically what prices is telling me right now is that we're going to complete the objective right this moment, right? We're going to complete it because in the next 15-minute candle, we should take out the 15-minute candle's low, which is what I am favoring. So let's backtrack a little bit. 2-hour order flow, 15-minute model. Now I'm going to go on to the lower time frames based on the 15-minute model. So now I go on to the 1-minute time frame. I take my entry whenever prices trades back inside a fair value gap on the minute time frame, and I'm targeting a rebalance of the 2-hour fair value gap. Notice how I'm not targeting previous week's low, or I'm not shooting for unreasonable targets. I'm shooting for a objective target, right? A target that makes sense. And after prices trades back inside the 2-hour fair value gap, my objective has been completed. So I moved my stops to break even and I let my runners do its thing. But I ended up getting stopped at break even. I took a really small win, but if you can position size, a small win could, if you position size correctly, could turn out to be a large win. But yeah, that basically sums it up for my video for this week. If you guys stayed until the very end, thank you guys so much for watching. And until next time, I will see you guys later.